I'll say two things. First of all, I don't think that you can paint the debut of spot Bitcoin ETFs as anything other than a monumental success, period. There's now something like $60 billion in the category overall, which is already more than half of what physical gold ETFs have, right? And physical gold ETFs have been on the market for something like 20 years. I think that's just mind-blowing. And again, as I mentioned, I'm going to keep coming back to this. I think we're just getting started. I just talked about how advisors and institutional investors have only begun, dipping their toe into the water on these.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward. With me today is Nate Geraci, who is the president of the ETF Store and the co-founder of the ETF Institute. Nate, great to have you on.
Thank you for having me. Do we have anything to talk about as it pertains to crypto ETFs?
Nah, nothing, nothing going on. Nate, I'm excited, as I mentioned before the recording, I'm really excited to speak with you because I followed you on Twitter and you share a lot of insights and knowledge about ETFs. And boy, there's so much going on and I have so many questions for you. So I hope I'm not going to bombard you, but I would love to get to know you a bit better. Tell us about yourself, where you're from, where'd you grow up, and your professional background.
Yeah, sure. So I'm sort of from all over the place. I actually grew up in a military family. My dad was 30 years in the Army, and so I obviously moved around quite a bit. I actually lived in Germany from sixth grade to graduating high school. But my mom's family's from New York. My dad's family's from California. So you name the place, I probably lived there at some point. But I ended up going to school at the University of Kansas, which that's a long story in and of itself, which I won't bore you with. But KU is about 45 minutes from Kansas City. And after living all over the place, honestly, I just fell in love with this area. I thought it was a great place to raise a family. It offered big city amenities, but still has a small town feel. And so I love it here. Now, in terms of my professional background, after I graduated from KU, I went to work for a startup tech company. And what's interesting is this was right in the heart of the dot-com bubble. So this was like 2000. And I was actually one of the earlier employees there. And this particular company bucked the trend. So there were a lot of dot-com busts. We ended up being a pretty amazing success story. Company grew to like 800 employees. And while I was there, I had a front row seat to everything in terms of building that company. And I had my hands in nearly everything. So I managed a team, a fairly sizable team. I managed the company's cash. I did financial forecasting. I worked with IT and project managers. I interacted with attorneys. I managed intellectual property. I probably couldn't have asked for a better opportunity just to learn about building and growing a business. Now, while I was there, I knocked out my MBA, and my emphasis was actually in investing. And I think that probably starts down the path to where I'm currently at. And the long and short of it is I always had a passion around personal finance and investing. I would say as long as I can remember, I mean, going back to when I was a kid, I always felt like I would do something in the space. And so around 2006, 2007, I had worked directly for the CFO at that tech company, that dot-com company I mentioned. And we had always talked stocks and investments in our personal accounts, right? We trade stock tips. I'm investing in this, he's investing in that, just had fun with it. But back at that time, we both were investing in ETFs in our own personal accounts. And one day, I believe it was like early 2008, we were having a drink at a bar, and this concept for the ETF store came up. We thought, why don't we start an investment advisory firm branded around ETFs? Because again, we both have been using ETFs in our personal account. And we thought ETFs had all sorts of potential benefits to end investors, but we didn't really hear about anybody else using them at that time, particularly other advisory firms. There were a lot of advisory firms that were just pushing proprietary product because they received commissions from doing so. And so this marriage of the RIA, the Registered Investment Advisory model, which we can talk a little bit about if you're interested, in the ETF vehicle, we thought was a winning combination for a business. But I'll tell you, and I'm happy to go into it. We started that in 2008. So it's funny. I started early on at a tech company or a dot-com company in the middle of the dot-com bubble, and then started an investment advisory firm in the teeth of the financial crisis. Tony, we bloodied our nose. I think we came into the business very overconfident, to say the least. I think we both felt like we knew a lot of people around town, that it'd be easy because we had these all ETF portfolios. People would be tripping over themselves to hand us their money. Very naive in hindsight. And at that time, around the financial crisis, people were scared, right? They weren't going to hand their accounts over to somebody who didn't have any experience in the business. And nobody knew what ETFs were at the time. So long story short, we took a lot of bullets early on. And what we did right is we built a really good foundation for an investment advisory firm. And I'll just wrap this up by saying, so around 2011, we were thinking about, okay, how do we educate the market on what ETFs were? In true story, I was sitting in a Starbucks here in Kansas City. I was meeting with a business acquaintance, and they were saying, Nate, nobody knows what an ETF is. And I was like, yeah, it's 2011. Certainly people know what an ETF is now. They're like, no, I don't think so. So I got up, I walked around the Starbucks. There were probably 50 people there. I asked every single person, have you ever heard of an ETF? Not one person had heard of an ETF. So I came back and was like, you're right, we have a big problem. How do we fix that? And so, long story short, I launched a radio show in Kansas City focused on educating the market on ETFs.
Wow.
That radio show ultimately morphed into what is today the ETF Prime podcast. So I believe back in 2011, it was one of the first ETF podcasts, if not the first ETF podcast that was out there. And so that kind of started the trajectory of just educating the marketplace on ETFs. And I'll wrap this long diatribe up by saying I also blog at a website called the ETFeducator.com. And then I co-founded, I think, as you mentioned, something called the ETF Institute, which is professional education and certification around ETF. So let me pause there.
No, it's great, Nate. You're certainly a pioneer in the ETF business and educating folks and building awareness. So that's amazing, and I love that Starbucks story. Kind of the grassroots, just going to figure out what are people thinking and what is their level of understanding. I have a quick question. Given that you saw the .com bubble or market rise and then collapse, are you seeing any comparisons or similarities to what's happening in crypto?
Yeah, I don't think so, because they're just completely different markets. I'm not a big fan. I always pay attention to history, and I think it's important to understand history, and especially history in financial markets. I'm very hesitant to try to draw conclusions from that history and bring it forward to the present day. So I can see where there are echoes of the .com bubble in crypto. But look, if you look at crypto's life cycle, I mean, Bitcoin's already been out there for 15 years. We've seen several boom and bust cycles. I just think it's different. Again, there's certain things we can get into in terms of the parallels between .com and crypto, but I don't see, in terms of a bubble or bust, I don't see that today, no, in crypto.
Sure. Oh yeah. And I guess, the .com boom was mostly US based, while crypto is a global asset class, and there's it's accessible, excuse me, by everyone if you have internet connection around the globe.
For sure.
Yeah. So let's talk a bit about you and the folks at the ETF store as investment advisors and your processes and outlook on the Bitcoin ETFs and how you're approaching clients about that. I guess if you can start with the first round of approvals, what was your next steps and what was your strategy to start presenting it to your clients?
Yeah, so let me back up and just tell you a little bit about the ETF store, the investment advisory business itself. So we work primarily with retail clients,
Mm.
managing all the types of accounts that you would expect, retirement accounts, right? IRAs, taxable accounts, trusts, so on and so forth. We are a full service wealth manager. So in other words, we can do everything, financial planning, budgeting, insurance. We can handle just about any aspect of a client's financial life. Now, on the investment side, obviously, we do focus on ETFs. That's a given with the name of the firm. And we offer a range of ETF model portfolios, which we do manage in-house. And if I look at our clients, a lot of our clients are using those models. However, I think it's important to note our advisors can use any type of investment, right? We're going to do whatever's best for the end client at the end of the day. But we do believe ETFs are very effective at providing low cost and efficient exposure to the markets. And so I think that's a good segue into Bitcoin ETFs. And the way that I'll lay this out for you is all of our advisors currently do have the ability to offer spot Bitcoin ETFs to clients. However, spot Bitcoin ETFs are not currently in the model portfolios that I mentioned. I do envision that happening at some point, at least within some of our models. But among our advisory team, I would say there's still a lot of education going on in terms of the end client. And the consensus among our team is that it first makes more sense to just have the ability to offer spot Bitcoin ETFs to clients versus essentially forcing it upon them within our portfolios. Sure. Now, that may surprise you. It may surprise some people listening to this podcast because people that follow me see me, continually advocating for spot Bitcoin ETFs, and I want to explain this. So, obviously, I've been a huge advocate for bringing spot Bitcoin ETFs to market. But when I'm out on Twitter, I'm speaking on behalf of myself, okay, not on behalf of our team of advisors, sure. And ultimately, our team of advisors and our clients have to be comfortable. But here's what else I'll tell you, which I think is very important. I do believe our firm is way out ahead of many advisory firms in terms of our knowledge around crypto and Bitcoin. And so if you think about this, this is important. If a firm like ours, and again, you mentioned what I'm doing on Twitter and my knowledge of the space. If a firm like ours still hasn't incorporated spot Bitcoin ETFs as a primary holding in our model portfolios, think about how early we still are in all this. And that's not any sort of statement on the current or future price of Bitcoin. I'm not in the business of making predictions on crypto prices, but I think we are so early in adoption. And you have to remember, many advisors, such as us, and many institutional investors, they have extremely rigorous due diligence processes, right? They're not just going to jump into something like spot Bitcoin ETFs overnight. It takes some time. Right. And so that's what's amazed me about how successful spot Bitcoin ETFs are, because again, I know our view of them and how we think about them. I just think we're so early, right? I mean, we're not even fully allocated a firm like ours. This thing is in like the top of the first inning.
Yeah, I mean, and then when you think about it, I know it's been growing significantly, like BlackRock's ETF, but it's only been what is it, Nate?
Like 5 months.
5 months, yeah. Right. Yeah, hasn't been like 2 years or something where people are comfortable. And I know many of the ETF issuers are going out, building their brand awareness, educating folks. So it's going to take time, like you're saying, crawl, walk, run.
Education is a huge part of this. And again, really educating the end clients, because as an advisor, we can understand it inside and out, but clients have to get it as well.
So I'm curious, and this is kind of like the macro for all of the financial advisors, RIAs and so forth, but also you guys. What's your timeline that you're looking, maybe is it a 1 year window or 2 year window or 5 year window where we're like, you know, that's when we're going to go full all in, right? We're going to pull the lever and add it to the portfolio and so forth.
Yeah, I'm not going to put a time frame on it. I think it's going to vary by the type of advisor and investor. It depends on their investment approach, right? We can look at the run up that Bitcoin has had overall since the launch of ETFs. Is now a great time for an entry point? I think we can debate that. Where does this fit within a portfolio? I personally tend to view Bitcoin as an alternative, something that is more akin to digital gold. And so my point of bringing that up is, does an advisor view it like that? Do they view it more as coming out of the equity holdings? All of this plays into how they go about allocating it within a portfolio. There's some firms that they want to see these things on the market for a certain period of time. That's not us. I'm comfortable because I know how the ETF structure works. I'm comfortable that these are functioning exactly as they should. But there are some firms that want to see a longer track record. And so perhaps they want to see these trading for a year or two or three before they'll invest. It's just going to vary by the type of advisor or investor.
Mm-hmm. So Nate, I got to ask, given your plethora of experience around ETFs, have you ever seen anything like this? The amount of inflows, I think, was it BlackRock's is the fastest growing ever ETF? And do you expect this trend to continue?
I do. I mean, I'll say two things. First of all, I don't think that you can paint the debut of spot Bitcoin ETFs as anything other than a monumental success, period. There's now something like $60 billion in the category overall, which is already more than half of what physical gold ETFs have, right? And physical gold ETFs have been on the market for something like 20 years. I think that's just mind-blowing. You look earlier this week, I believe on Tuesday, 5 months after launch, we had a day where there was $1 billion in net inflows into these products in a single day. There's been like $15 billion into these products overall. And again, as I mentioned, I'm going to keep coming back to this. I think we're just getting started. I just talked about how advisors and institutional investors have only begun, dipping their toe into the water on these. But I'll also say that I'm not shocked. I think I was one of the few who was extremely bullish on the potential demand for spot Bitcoin ETFs way before it was cool. So I actually predicted in early January that spot Bitcoin ETFs would obliterate every ETF launch record out there. And I'm pretty sure that's about what's happened.
Yeah.
So I can't say that I'm overly surprised by what we've seen, but I'll just tell you, the reason I was optimistic was because of direct conversations that I was having with investors and advisors. I could just tell there was a lot of pent-up demand. They wanted this product. And the other thing was I had a lot of anecdotal evidence. So you'll find this interesting. Anytime that I covered spot Bitcoin ETFs on my ETF Prime podcast, like clockwork, downloads would spike. And not just by a little, but these were pretty big spikes. And so it was clear to me that the market wanted spot Bitcoin ETFs. And then the last thing I'll say just regarding the demand and what we've seen, think about the names that are involved in this space: BlackRock, Fidelity, Invesco, Franklin Templeton. When you see those types of firms file for spot Bitcoin ETFs, I'm just telling you, those firms don't get out of bed for what they perceive as small opportunities. And so the fact that those types of players wanted in on this space, I think that should have made everybody, relatively bullish on what the demand would look like.
Yeah, absolutely. I'm still blown away. I mean, I know you've been in the ETF business and kind of had a pulse on this ahead of time, but I'm more familiar buying Bitcoin directly and self-custody and so forth, but I was not expecting this type of performance. It's incredible. I'm so blown away, and I'm really excited for what's coming for the remainder of this cycle in later this year into next year. Now, not everyone is a fan of these ETFs. Vanguard and some of these folks are still on the fence or, really against it, being contrarians. Do you think they're going to capitulate eventually?
It's tough to say. I mean, somebody like Vanguard, just given the types of products that they have historically offered. I certainly don't expect them to offer crypto ETFs anytime soon. But longer term, I'm of the belief crypto's here to stay. And we can talk about tokenization and those sorts of things. I think ultimately securities will be tokenized. And, so does that, if you think about the path of that, does that incentivize somebody like Vanguard to make sure they're being forward thinking and get involved in this market? And is a crypto ETF a way to do that? Yeah, sure. But I think it's tough to predict what they'll do. But my belief is that every major ETF issuer who offers a broad spectrum of asset classes, they should be involved in crypto ETFs. And I'm honestly shocked when I look at issuers such as State Street and Charles Schwab, pretty big ETF issuers, that they're not offering crypto ETFs yet. It doesn't make any sense to me.
Do you think that's, and I know we can't get into the minds of people, but that's a very bad business decision on their part, and eventually it will play out over time where they lose market share as this asset class continues to grow and there's so much demand for it?
Yeah, I think that's possible. I mean, my expectation is still that Charles Schwab, excuse me, will ultimately launch spot crypto products. State Street, we'll see. But yeah, I do think it puts them at a disadvantage. Again, the numbers speak for themselves. I just mentioned that the spot Bitcoin ETF category in 5 months is already at 60 billion. So if you're an issuer out there, you can't ignore a category like that.
Yeah, absolutely. And Nate, what we're seeing, some game theory playing out here. I know the United States was not the first to launch spot ETFs. I think Canada had it and so forth. But look, the United States has the largest capital market, so it was the largest domino to fall first. But then Hong Kong, and then London, and I think just this past week Thailand or something like that. What are your thoughts on the global launch of these spot ETF products?
Yeah, I don't know that I have any profound thoughts on international spot crypto ETFs, other than to say it's been clear to me that regulators in other countries have been much more welcoming of crypto overall, I would say. Not every country, but on the balance, I think that's a fair assessment. And I think the US, it really needs a comprehensive crypto regulatory framework in place to move forward. I think that what we saw in the process for spot Bitcoin ETFs coming to market, where it took a lawsuit from Grayscale to push those through. We can talk spot Ether ETFs if you'd like, but that's indicative of the lack of crypto regulatory framework we have in place. That the way that process or those processes have played out. So I would prefer. I'm not here, some nationalist waving a flag, but we live in the United States. I would love to see the United States take a leadership role as opposed to being a laggard in crypto.
Absolutely. Speaking of the Ethereum Spot ETF, so we got the partial approvals. It seemed like the political pressure, maybe, or I don't know if this was part of the SEC's plan, but they kind of did it last minute, right? There was no communication or proper communication with the filers, and then all of a sudden, a week ahead of the deadline, or the week of the deadline, hey, we're going to start approving these 19B-4s, is it right? And then we're going to work on the S1s. What are your thoughts on how that played out?
I'm only smiling because I think I'm one of the few people out there who have said that I don't think this whole thing was primarily tied to politics. And I think, as you know, I wasn't that surprised by the spot ETF 19B4 approvals. It does seem like just about everyone was expecting denial. But Tony, honestly, I try to step back and just look at the evidence. And the fact is, if you go back to October of last year, the SEC approved Ether futures ETFs. And this was after they had lost the Grayscale lawsuit. This was also, I think, importantly, this was well after Ether had moved to a proof of stake.
Right.
And, of course, as we already covered, the SEC approved spot Bitcoin ETFs in January. So just think about this. We had the Grayscale lawsuit, which the very basic thrust of that was, since the SEC approved Bitcoin futures ETFs, they needed to approve spot Bitcoin ETFs, right? The spot and futures markets are highly intertwined, which I don't think that takes a rocket scientist to figure out. Okay, so you take Grayscale's lawsuit victory, the SEC approval of ETH futures ETFs, and then their approval of spot Bitcoin ETFs. This seemed pretty straightforward to me that that we would get spot ETH ETF approval, or at least I was optimistic on the prospects there. And then I'll add to that, we were given some clues along the way. So if you go back and look at the comments that SEC Commissioner Hester Pierce made, I think this was back in January after spot Bitcoin approval, she said that we don't need a court to tell us, the SEC, that our decision-making was arbitrary and capricious in order to get the decision right on spot ETH ETF approval. We also got word that the SEC was engaging with issuers on leveraged Ether futures ETFs. That was in late April. Grayscale pulled their 19b4 filing on their 33 Act futures ETF, which I only mention that because if they thought the SEC was going to deny spot ETH ETFs, then they should have kept that filing out there to get a decision on it so they could then use that in any subsequent court case if they decided to sue the SEC for not approving spot ETH ETFs. I could go on, but there was a bunch of evidence along the way that I felt like people missed. And, was there some politics involved? I'm not sure that's possible. But I think the SEC was going to be hard-pressed to deny these things. I think that if they had denied, they were going to get sued again. I truly believe that, whether it was Grayscale or somebody else.
Yeah, I was talking a bit about that this time around, I don't know if Gary Gensler wants to mess with BlackRock, Fidelity, Franklin Templeton, and the whole group of these folks who could all pile on litigation like crazy.
But not only that, and maybe I wasn't, quite as eloquent as I wanted to be in what I just described, but this was pretty straightforward. You had CME traded Ether futures. The whole setup with spot ETH ETFs was exactly the same that we saw with spot Bitcoin ETFs. And I just didn't see a path. How were they going to overcome denying that? How are they going to win a lawsuit on that? The things were exactly the same. I just didn't, it didn't make sense to me. So I kept going back to like first principles on this in terms of why I had some optimism. Now, to be fair, I wasn't out there saying I was 100% sure these were going to be approved, because you never know what the SEC is going to do. Right. I certainly saw a path where if the SEC denied them, I thought that was a realistic possibility. I just believed that they would be sued and ultimately lose that lawsuit. So I thought it was one of two things. And I tweeted this out all along the way. I was like, they're either going to be approved or the SEC is going to get sued.
Absolutely. Now, Nate, what's your best guess as to when these S1s will be approved? Are we looking at another month, two to 3 months, or next year? And do you see the inflows being maybe 50% of what Bitcoin's has been so far?
Yeah, two good questions. Look, I don't know what the SEC is going to do, but every indication, everything that I'm seeing, including some comments yesterday from SEC Chair Gary Gensler, is that they are attempting to proactively work through this process, get the updated S1s in, have them revised, they'll resubmit them again. My expectation would be in the next several weeks to 2 months max. I could be wrong on that. I don't have any inside information. I think I saw Bloomberg's Eric Balchunas set an over-under of like July 4th. I said I'd take the under on that. I think I would stick with that I would expect approval by July 4th.
And then what's your, look, this, we're guessing here, right? This is speculation, but what do you think the inflows might be? Obviously, I think there might not be as much demand as there is.
Sorry, had a lighting issue. I think that a reasonable proxy, so let's just start high level. Ether itself is about 1/3 the market cap of Bitcoin. I think that that's a reasonable proxy for what we will see in the ETF space. Now, some people will say these ETFs aren't going to have the ability to offer staking, so maybe that'll take some of the demand away. And I think that's a reasonable argument. Maybe that pulls a little bit of demand away, and it's not quite 1/3 of what we saw from Bitcoin ETFs. It's a little bit less than that. But overall, I'm pretty optimistic on what the flows will look like. I don't expect them to look like what we saw from spot Bitcoin ETFs for a couple of reasons. Again, Bitcoin's a bigger market, but also that was the first crypto ETF product out there. And so I think there, again, was pent-up demand that I don't know that we'll necessarily see from spot Ether ETFs. But look, longer term, depending upon how this all plays out, I could see a scenario where spot ETH ETFs are every bit as big of a category as spot Bitcoin ETFs. That may take some time. It's going to evolve. People are going to have to understand Ether and what the applications are, what the investment case is. But yeah, I think it could grow into a very sizable category over the long term. So I'm overall pretty bullish on what demand will look like.
Let's talk a bit about the staking aspect, because that's still up in the air with regards to how the SEC wants to treat it, or how crypto regulations play out in the US, because the SEC sees that as a security offering and so forth. So let's say eventually we get this sorted out and the SEC says, look, you can launch an ETF, an ETH ETF with staking. Maybe this is a dumb question. Can that be attached to the existing ETFs, or an entirely new ETF needs to be launched with that?
I just think the existing ETFs would be updated and they would have the ability to stake and then obviously provide that yield to end investors. I think it'd be that simple.
Okay.
It's clear that that's something the SEC is not currently comfortable with. I think that gets into the whole discussion of whether or not Ether is a security. If you look in the S1s that are filed, I believe there's quite a bit of language around, the regulatory winds could shift and maybe Ether is labeled as a security at some point. I think all of that has to be hashed out, no pun intended, before obviously we get staking. I do think ultimately staking will be a part of these ETFs. It's just a matter of when that happens.
Now, Nate, there's been a lot of talks by media, CEOs and so forth of a Solana and an XRP ETF possibly on the horizon, maybe 2025. But I know the futures has to be approved first. It has to go through the same process Bitcoin and Ethereum has gone through. What likelihood are you giving for these things to happen?
Yeah, I mean, you hit the nail on the head. I guess it's going to take one of two things in order for additional spot crypto ETFs to come to market. So one is what you said. We're going to have futures listed on a venue that is regulated by the CFTC. So for example, we would need to have CME traded Solana futures. Here's the thing though, even if we get those, the SEC is going to want to see a track record on those. They're going to have some history of trading. And then even if we get that, I think we would then need to see Solana futures ETFs, right? And then ultimately we would get a spot Solana ETF. If you think about how long it would take for all of that to play out, we're talking years, in my opinion. The other path, which would be much quicker and much easier, in my opinion, would be for Congress to put a legitimate regulatory framework in place for crypto, right? Where there's a clear definition of what's a security and what's a commodity and who has oversight. I think if that can get done, then other crypto ETFs could come to market much sooner. But, as you know, we're also in an election year. Yes, so, yeah. We talked a little bit about the political winds. Who knows how that's all going to play out and whether we can get Congress to actually put a crypto regulatory framework in place. I think I'm less than optimistic about that right now. And so that's a long way of saying I don't expect to see Solana or XRP ETFs come to market anytime soon. I really don't.
Question about basket ETFs. So for example, once the Ethereum ETF, spot ETF is live, could BlackRock say, hey, we're going to offer the top two Bitcoin and ETH in this particular ETF. And then eventually, let's say 5 years from now or 3 years from now, the XRP Solana ETFs are approved. Could there be a top 5, top 10 basket of those tokens in one ETF?
I love this question because, Tony, that's where this is all heading. It's just a matter of time. So yes, in the short term, I'm actually surprised that even today, we haven't seen a filing for a combined spot Bitcoin and spot Ether ETF. That shocks me. If I was an issuer, I would have filed that already. And I think you'll see one or two flavors there. You'll see just a very basic market cap weighted approach. We talked about how Ether is about a third the market cap of Bitcoin. You'll see somebody do an ETF that's just a market cap approach. And then you'll also see ETFs that are actively managed, where issuers trying to make a determination of how much Bitcoin versus Ether they want to own based on the underlying market. Then to your question, longer term, yeah, I think we'll see index-based crypto ETFs. I think about an issuer like Bitwise, who already has a publicly traded fund. It's not an ETF, it's a basket of crypto assets. That's what we're going to see in an ETF wrapper. And so you'll see index-based crypto ETFs, and you'll see actively managed crypto ETFs. Now, I know there's some people listening here that, and I've seen this out on Twitter, where they will go, Bitcoin and Ether are two completely different crypto assets. So why would I want to own these in the same ETF? Well, that's exactly the point. If you think about advisors love diversification.
Right.
And so it's really that simple, that to own a diversified basket of crypto assets, I think would be attractive to the marketplace. But yes, I think we have spot Bitcoin ETFs today. I think we're going to have spot Ether ETFs soon. We'll then see combined spot Bitcoin and spot Ether ETFs. And then, as I described before, once the regulatory environment, once we have some clarity there, and additional crypto assets come to market, then you'll see index-based and actively managed crypto ETF baskets.
So Nate, we've seen in the crypto market that there's a lot of volatility, right? I don't think I've seen volatility like this in any other asset class, although there may be some stocks that have moved like that, right? But overall, crypto is super volatile. And that could be because it's a young asset class. Will the ETFs help reduce some of that volatility, kind of maybe what they did with gold, where gold became less volatile? I don't know if I'm articulating that well, but
yeah, I don't know. Look, I guess potentially, but here's what I always say. ETFs are simply investment vehicles, right? If someone wants to buy Bitcoin, they can buy it direct, they can buy it on an exchange, or they can use an investment vehicle such as an ETF. And while the ETF has certainly opened up access, I think to say that an investment wrapper can bring down the volatility of an asset class, that doesn't necessarily make sense to me. Right. So think about high yield bonds or technology stocks or whatever you want to pick. Just because those are available in an ETF doesn't bring down the volatility of those asset classes. So I don't know that that's really a factor. And I guess the other thing I would say, I personally view the volatility of something like Bitcoin as a positive. I think that's a feature, not a bug. I think if you have a globally diversified portfolio and you have a small allocation to Bitcoin, let's just call it 5%. If you're sizing that position correctly, right? So that 5%, and you're rebalancing in a highly disciplined manner, the volatility works in your favor. So yeah, I don't think the ETF impacts that. Maybe somebody has some academic study out there somewhere that shows opening up access brings it down. But again, I just view the ETF as it's a pass-through vehicle. It's a way to access an asset class. And just because you have that access doesn't necessarily bring down the volatility.
Or is it not so much the ETF product itself, but rather on-ramps being built in different ways where there's more liquidity coming in and more people are getting access to the assets. So maybe it's just naturally over time.
Yeah, I think that's fair. And also to your point, I think by having those on-ramps and opening up access, what that does is it brings a wide variety of investors to the table, right? With much different motivations. And so maybe because of that, you get some reduction in volatility. Again, that's probably outside my pay grade. I'll leave it to the academic wonks to figure that out.
Sure. So Nate, look, we've seen the 4-year cycles, the blow off tops and so forth. Possibly 2025, we may see that. And we talk about rebalancing our portfolios. So are you expecting a major sell-off, not only in ETFs? Well, we've seen major sell-offs outside of ETFs, right? But with the ETFs, a good amount of outflows, maybe 12 months from now.
Look, well, one thing I don't make any price predictions. I don't have a crystal ball. I always say my crystal ball is broken. So I'm not going to make any sort of prognostication on where the future price of Bitcoin or any crypto asset will be. In terms of flows, I expect demand to be similar to what we've seen already. If anything, I think demand is going to continue ramping up for all the reasons I described earlier, in that advisors and institutional investors are just now wading in to these products. It's a trickle at this point. I believe that's only going to increase. So I think demand's going to continue to be along the lines of what we've seen. I don't expect some big drop off. If anything, if I had to guess, I would expect demand to accelerate.
Sure. Tough question for you, and this is more of speculating and trying to maybe get an idea, predicting what the future may look like. How do you think the ETF industry is going to change, if there is any change, based on these ETFs, giving the performance, giving the global distribution of the asset, and many of them are hard cap, like Bitcoin's hard cap. Do you see any major changes to the ETF industry and models based on this?
No, I mean, if I'm understanding your question, are you saying that this may change the actions of issuers within the industry?
Oh yeah, whether it be the issuers or the type of ETFs that are offered, does it open? I think you had hinted towards it earlier about like tokenization, and we may see ETFs around tokenization of real world assets.
Yeah.
Yeah.
I don't think so. I think that, again, if you look at the largest players in the space, I mean, think about, again, let's talk about BlackRock and Franklin Templeton. I would put Wisdom Tree in this category. They're already tokenizing funds, right? We see tokenized money market funds out there. Wisdom Tree has something called Wisdom Tree Prime with tokenized funds. It's already moving in that direction. I don't think the success of the ETFs necessarily changes that. Certainly, players who are not currently involved in the crypto space are going to be looking at the success of the spot ETFs and maybe looking at what people like BlackRock and Franklin Templeton and Wisdom Tree are doing and saying, hey, we need to get involved there. But I think we're already moving down the path. I think what will accelerate it, and this is I think a common theme in our conversation here today, is just clarity from a regulatory perspective. I think that's going to be the real accelerant here to enacting real change, not just within the ETF space, but just across the entire asset management complex.
Do you see eventually that some of these ETFs, and I don't know if this makes sense, but go on chain, they become tokenized where it's that part of the global 24/7 trading on the blockchain?
100%. I mean, I think I mentioned this before. Tokenization, in my opinion, is where this is all heading. And I'll go as far as to say that I think ultimately ETFs themselves, again, will be replaced by tokenized securities. And that's what I'm saying. I mean, we're already seeing that from with these tokenized money market funds. Ultimately what it's about is it's about efficiency. It's about cutting out intermediaries, right? Fee takers. That's what tokenization brings to the table. And I think that's attractive to asset managers. They want to cut out those intermediaries, right? People who are taking fees both from them and the end clients. So yeah, I think ultimately we will, this is all heading towards tokenization. What's the time frame? Who knows? We're probably on a decade plus type time frame with that. But I think that's where we're heading.
I was just about to ask you, is it too early for you guys to start game planning on this? And how would that change your jobs if it's a 24/7 market?
Look, in asset management, things are always evolving. So I think we have to evolve with them. That's why I'm a big believer that I'll just take my business, the registered investment advisory business. If there's an advisor listening to this and they just completely believe crypto is a scam, they can't stand it. I don't care. You have to educate yourself as an advisor because your clients are going to be asking for it. If nothing else, they're going to have questions about it. You need to be able to intelligently speak to that. We've talked about all these large asset managers getting involved in the space. This is not going away. I always say that whether you believe in it from an investment thesis perspective or not, the underlying blockchain technology and what we're seeing with tokens is not going away, period. So you have one of two options. You can either ignore it at your own peril, or you can get educated on it. It's that simple.
Absolutely. Um, Maybe along the lines of what you were talking about, how this will change your business. Are you exploring using blockchain in any way in the back end of your business,
Yeah.
improving things and whatever it may be?
Yeah, it's a great question. Right now, the answer is no. There's nothing immediately that I can look at where I think that would be beneficial, more so just because of the size. We're a small boutique RIA, right? If I was running a trillion-dollar asset manager, then it would be a different story. But again, that I'm sure will change as things go along. I think a good example of that would be something like chat GBT, right? And artificial intelligence. That is something that we are starting to leverage within our business. And so as technology changes, I think you have to look at that technology and implement it where it makes sense.
For sure. Um, with the ETF success and boy, I mean, all these big players, big names like we mentioned, BlackRock, Fidelity, and so forth. Do you think the stigma is entirely gone? All the FTX fallout and all the nonsense that took place there is definitely behind us. Like we've gone to a higher plateau and it's forward looking now and nobody's looking back.
Um, I don't know. I mean, that dirty laundry is always going to be there. I think that it's probably been marginalized more to a certain extent because of the success we've seen from spot Bitcoin ETFs and the big players getting involved in crypto now. But look, Tony, any industry is going to have its good and bad players, unfortunately.
Yeah.
And in an emerging industry such as crypto, um, it is going to be it's fertile ground for fraud. It just is. That doesn't make the industry bad. It's just that those are things that need to be worked through. And I think that's one of the things that's been lost here over the past several years is it's real easy to focus on the bad behavior and some of the fraud and some of the things that have taken place. And I'm not saying those should be ignored, but it's real easy to shine a big light on those and not focus on all of the positive things occurring in the space. And I've always said, look, I have been interacting with people directly in the crypto space for, I guess, about 7 or 8 years now. And these are just on the whole, these are some of the smartest people that I interact with in any aspect of what I do. That tells me something when I see the caliber of individual who is operating in this space. Now, that doesn't mean that really smart people can't also commit fraud, right? Maybe that happens or do things they shouldn't be doing. But I'm just telling you that the level of intelligence I see, the caliber of talent in the crypto industry, to me is mind-boggling, and it's not something that I can ignore when I see that. This isn't some fringe, where you have low caliber players involved in the space. We're talking some of the smartest, brightest minds, probably in the world involved here now. So you just can't ignore that, in my opinion.
Yeah, absolutely. And I've spoken to quite a few who were in Web 1.0 and 2.0 and are here now. Guys, obviously, Andreessen Howard's the guys who are at Netscape, Mike Belshi at BitGo, who was at Google, and it just many of these legacy tech guys are here building in Web3. So, to your point, a lot of brilliant and smart people here. I know we're coming up on time. I got some wrap-up questions here for you. First is if you could create your own metaverse, what would the theme be?
Create my own metaverse.
Where would you put your Oculus and go to?
uh, Probably something that features like a bunch of 90s alternative and grunge bands, right? So like you could walk around and attend a virtual Nirvana concert or I don't know, a virtual Smashing Pumpkins concert or whatever, and maybe interact with other people who appreciate that same genre of music. I guess that's what I would create, but I don't know. I prefer living in reality. So I'm not a big metaverse person, but maybe that'll change.
Well, it sounds like you're a 90s alternative grunge rock fan because that was going to be one of my rapid fire questions. And I'm a big fan as well. I still listen to my Pearl Jam, Stone Temple Pilots, Nirvana, and so forth. Let's jump to rapid fire. Favorite food?
Favorite food, without question, is going to be spaghetti and meatballs. Okay, but it has to be homemade Italian style.
Mm.
So I obviously have an Italian background. My mom's probably one of the best cooks walking the face of the earth, and she makes this from scratch. There's nothing that compares to it.
Oh, that's awesome. And favorite musician? Well, I guess your favorite band.
Okay, so favorite band, I guess I would probably I'd give you two. I would say I've always had, I love The Cure, right? Which they span the 80s into the 90s. So always love them. Somebody more recent, maybe Cage the Elephant, who they're a friend of mine because I'm actually going to go to their concert later this summer, which I can't wait for. But I'll plug, there's a new indie band. I don't know that they're new like this year, but over the past several years, called New Constellations, who I went to their concert. It was like last August or September. They were amazing. One of the best live performances I've ever heard. And so over the past year, I've been wearing their songs out.
I got to check them out. I'll check them out after this interview.
Definitely worth checking out.
Favorite movie?
Movie. I mean, I'm a sucker. Any mob movie. I mean, obviously Godfather, we can go Donnie Brasco, Casino, any of those I'm a sucker for. Something more maybe mainstream flick, I'd go Gladiator, if you remember that. I always liked with Russell Crowe, always loved that movie. Just a great, just to go watch like on a big screen or in the theater. I think it's tough to beat that one.
Yeah, I'm a big fan of Gladiator and mobster movies too. I love Goodfellas, Casino.
Goodfellas, all of them. I mean, I could watch those on a loop.
Yeah. Favorite book?
Book, you know what? It's funny. I read a tremendous amount, but I'm not a big book fan. So like I'll read academic white papers and all that. I'm just not a big fan of reading books. This may sound, I hope this doesn't come off wrong. I think part of it is I come across so many people who all they do is read books, but they're not actually we talked about the metaverse earlier. They're not actually like living in reality, right? So somebody will read like these self-help books on, I don't know, how to start a business or whatever, but they're not actually doing any of it, right? Or you're reading all this history, you're reading how other people live their lives, but you're not actually living yours. So I hope that doesn't come across wrong. It's like, I appreciate people who love good books. Obviously, I've read plenty of books before, but I'm just not a huge, I don't get excited over books.
Lately I've been feeling the same way. I more listen to, and this may seem like, I hope this doesn't come across wrong, but more podcasts and listening to getting stories that way and not some knowledge that way. And don't get me wrong, books.
Yeah, of course. I mean, books have a place, are very important. I think, again, to understand history, we talked about earlier. It's not where I devote my time.
And when you're not working at the ETF store, what are you doing for fun?
I don't know if I would call this fun, but I'm a big runner. So I actually love running. I mean, I'll run, 5 or 6 miles 4 or 5 times a week. For me, it's just something, I'm a extremely thin individual. I don't do it for anything cosmetically. It's more for me. I love going outside. It's a good way to clear the air. I love it from a mental standpoint. Like you said, whether it's listening to music, listening to podcasts, or even just running in the quiet, I love it. So, I stay busy enough with, the ETF store and the ETF Institute and the podcast and all that I don't have a ton of time for hobbies. So it's really, family first, and then obviously everything with a business. And then I enjoy running. So I guess that'd be the hobby.
Nate, absolute pleasure chatting with you, man. I appreciate your insights and knowledge, and we'll have to have you back on once these Ethereum Spot ETFs go live. But thank you so much for joining me.
Happy to do that. This was a lot of fun. Thank you, Tony.